Hey guys, welcome back to my YouTube channel. Today we're going to be talking about break of structure. So basically what that is say we have a downtrend, that was sloppy, and then we break into an uptrend. So let me show you guys a little bit of how that works. So let's say we have this downtrend with lower lows right here and lower highs, okay, and then we break past this high right here, that would be considered a break of structure right there. Same thing with um a bearish, same thing with bearish. So same thing with bullish to bearish. So say we have a bullish market and we pass through that low, that would be considered a break of structure. So let's draw that out. Okay, so that is now a break of structure here. All right, and something I want you guys to know is that basically this is how, let me explain to you guys basically a little bit of how these trades go and work, because you can not only use break of structure, you obviously can't go onto the chart and be like, okay, we have a break of structure, let's enter. Like, you obviously have to put this into your trading strategy with other confluences. You can't just be like, wow, there's a break of structure right here, let's enter and take a trade. Like, you obviously have to wait for these candles to go up to this fair value gap, and then like that's your third confluence. You obviously have to wait for the sweep of liquidity. So that's a little bit how these trades work. Is say we have an uptrend, right? Okay, and then we break to the downside right here. This is a break of structure right here. Okay, so we have the break of structure, and then we obviously have that liquidity sweep right here. Liquidity sweep right there, this line. So this high right here got swept by that one. So these orders got filled right here. And then it goes down, breaks structure. So that's identifying that the market has changed from an uptrend to a downtrend. And then we on my strategy that I'm showing you guys that I learned, we wait until a third confluence, which is either this breaker block right here, which would be the candle down right before the liquidity sweep. And then you can also use the order block, which is the candle that swept liquidity. So you can use this whole area right here for your third confluence. Or if you have a small fair value gap in here and we come into that and we come back out, that's your trading plan. Like, that's how you have to set up your trades. You cannot just be like, okay, we have an uptrend, break of structure, boom, let's enter. It's not like that. That's not how it works. You have to plug this in with other things. You can't just trade off of this. So basically how this would work, and then in a downtrend would be, say we have this downtrend, right? We have lower highs and lower lows. We just got done sweeping liquidity right here. Okay, after this liquidity sweep, we wait for the break of structure. And then after that break of structure, we wait for the third confluence, which is either a fair value gap right here, or this breaker block right here, or this whole entire order block right here. So wait for a price to come either to here, or to here, or to this whole thing, and then rally up. So that's basically my trading plan, how I'm explaining it to you guys. That's what I've learned. Excuse my drawing. I know I'm pretty bad at that, but anyways, we're gonna go on the market today, and I'm gonna show you a little bit about plugging this stuff in. I'm gonna show you the liquidity sweeps and also the break of structure. So let's start with We can actually start with today's. So today I actually took a winning trade, and I'm not gonna show you guys, but I will show you guys a little bit of how it went. So basically, we have this high right here, and then we have this high right here. Okay, so we have these highs, and as you can see, market swept those highs. So let's go into the 1 minute. So here we can see that market got swept right here. The highs got swept. So what are we going to do now? We're going to wait for a break of structure, which happened right around here actually. So we have the break of structure right here. And then as soon as it breaks structure, we draw our third confluence, which I'll show you guys in a later video more about this. But let's see. So draw out third confluence, or we can also wait for this later on. But this, let's say that we had either so we have, let me draw these out for you guys. So we have this breaker block right here. We have this whole entire up candle as a order block. And then we also have this as a fair value gap. So price did go into all of it and then respected it, went down. And that would be a perfect entry for you guys. You could have also waited for a retracement into this order block. This fair value gap right here and entered off that. So that's basically a little bit of my trading plan and what I've learned so far. Let's go look for another example. Could look at yesterday's trade that I didn't take. So let's just wait for this to load. All right, so let's go to Tuesday. Wi-Fi's been pretty slow lately. All right, so we're gonna start off right here. I know there was a higher sweep, but we could also, let's just use that. So I'm pretty sure I used this as an example before. I remember this, but basically these are equal lows. So basically we swept liquidity right here. Orders got filled, and as you can see, price went up. Price came back down to this fair value gap right here, and then rallied all the way up until these equal highs right here. So that would be a pretty good trade for you guys. And this is just to show you guys a little bit of how this works and a little bit of how you have to implement all of this to your trading strategy. Obviously, there is a trade every single day except for like horrible days, like when market's too slow, like on Mondays or on high news days. Market might be a little too erratic. So yeah, let me just look for a little more uh, trades for you guys. So let's say right here, this was Monday in the morning. So we have this, all of this gets swept. So we have all these highs get swept, right? And then we have our breakup structure right there. Let's mark that out. So we have break of structure right there, and then we're gonna mark out this order block right here. We're gonna mark out this breaker block right here, and looks like the fair value gap is all the way up here. But price did go into this breaker block and order block, so that would have been a good entry right there, and you'd have been able to target whatever was over here that matched this, which was these lows, all of these lows. You could have easily targeted this even, or this. So yeah, so even if you did enter just off of this, you would have been able to target either this, or even this way down here, and it stops right above this high right here. So man, I'm gonna talk about take profits and um, stop losses and all of that in another video. Obviously, right now I'm just trying to show you guys how you have to implement all of this together to form your trading strategy. You can't just use a break of structure and expect that to work, and then when you're like, oh my god, it didn't work, like he's a fake, he's a fraud. Like, it's not like that. You obviously have to use different confluences and plug them all together. So that's just how it works. So that's the video for today, where we were talking about what are so we're talking about break of structure. You guys can also go onto the line chart and mark out these by, like, let's look for a good trend. So you guys can mark these out by, you guys can go up to path, and then you guys can we'll start right here. So we have this low, this high, this higher low, higher low, higher low, and then higher low, high, and then market switches right there. So we're gonna draw this out. Boom. That's where market changes right there into a downtrend, and then change it back into an uptrend, change to a downtrend, uptrend. And you guys could just go over all of this and just mark all these out. Don't comment in my comment section and be like, what happened right here, and it switched, but it didn't go higher. These are liquidity sweeps. I made a video on this before, so just take that into consideration. There's a difference between displacement and manipulation. So this is manipulation, and displacement would be like this right here, where it completely displaced through. And I'll talk about that in another video. So yeah, that's the video for today, guys. Thank you guys for watching. Please like and subscribe.